Watching KPRC2 News.
Welcome back. According to the April Consumer Price Index, inflation is at its lowest point in 4 years.
Right. So what does this mean for everyday Houstonians? Here to break it all down for us is Stephen Cates, a financial analyst with Bankrate. Stephen, thanks for joining us this afternoon. I mean, it sounds good. Inflation is at its lowest in 4 years. How soon will we feel the impact in our day-to-day spending?
Well, I think it's important to establish what this really means, that inflation is falling. The rate of the price increases has reduced, but prices are still rising. So it is important to understand that prices aren't falling. We're seeing year over year a 2.3% increase, and on a month over month basis, a 0.2% increase. So it's still an increase, and that's something that people should recognize, that when they go to the grocery store, they go to any store, a service establishment, that it's possible prices are going to be higher, and they may recognize that if they compare it to a year ago.
Important distinction to make. Stephen, we know energy bills are climbing as well. What can people do who are stretched thin? What can they do to cut costs right now?
Well, in the Houston area, as we get into the summertime, the heat is going to certainly be rising. I think people are going to have to be wary of the amount that they spend on things like air conditioning, things that are going to be, electricity heavy. Any kind of operation that's going to involve natural gas is going to probably be a costlier endeavor. We saw natural gas, we saw electricity as two of the energy services that went up the most. Now, gasoline prices have fallen and have been falling, probably will continue to fall even in the next report. So there is some sunny news here. It's a bit of a mixed bag, but people are going to have to be aware and monitor those prices to try to make sure that that fits in their budget.
All right, let's address the elephant in the room here, the tariff pause. Will the tariff pause keep prices steady, and which essentials should people watch?
Well, I think that there's no erasing the interruptions that we've had in April already. The tariffs were established in early April. We had a slowdown of shipping from elsewhere in the world because we are still a heavily importing nation. That isn't going to go away. I think that there's probably some Band-Aid fixes for certain businesses that can speed additional imports in to sort of cover their dwindling inventories. But we'll probably see some situations where there's some impacts, whether it's on the store shelves or it's in rising prices. Businesses have telegraphed that they expect to pass on some or all of higher import costs to customers.
Stephen, with high interest rates and shaky inflation, how can people avoid falling deeper into debt?
Well, it's unlikely and growing even less likely that the Federal Reserve is going to cut interest rates in June or July. So people should be aware that high interest debt costs from credit cards, personal loans are not going down and probably not going down anytime soon. So taking on additional debt today is something that you want to do very carefully. If you can establish an emergency fund, if you can pay off high interest debt to the best of your ability, that's going to put more money in your pocket long term. That's going to give you a little bit more room in your budget if prices do go up and if we have a slowdown in the economy.
A tough pill to swallow. Things still really rough for so many families right now. Stephen Cates, financial analyst with Bankrate, we appreciate your insight this afternoon. Thank you.